Many people online think that drawing liquidity and predicting or anticipating price is completely discretionary when that is completely far from the truth. There are many ways to mechanicalize your trading, drawing liquidity, and your targets and be able to predict price without needing any experience in the markets. Today I'm going to show you guys the exact mechanical ways or different types of methods I personally use to find a very clear drawing liquidity. Let's get straight into it. Number one is going to be an indicator. Okay, I have my personal ETU daily bias indicator that is included on my website. Again, it gives me a bias, as you can see on the top right of my screen. Every single daily candle, I get a new daily bias. It's going to be either bullish, bearish, or neutral. What neutral means is it's going to be anticipating that the drawn liquidity for the day is going to be either ranging, meaning you can trade both sides of the market profitably. If it's bullish, I'm obviously looking to really only look for longs for the most part. If it's bearish, I'm going to try my best to look for many shorts for most of the day. So number one is using some sort of indicator, because indicators are coded to be fully mechanical. And yes, the indicator that you get access to in the EDU Elite package is fully mechanical and you don't have to do a single thing. Number two is using big gaps in the market. High time frame gaps. Or you can call these imbalances if you want, fair value gaps. I traded mitigation, and what does that mean? If I see a massive gap, that means it's going to get filled. For example, this ties directly into these three trades I took back-to-back massive winners and why I took them. So let's go to the 1 hour, or let's even go to the 4 hour to start off. First off, as you can see on the 4 hour, what do you see here? Well, you guys should know what imbalances are by now, but if you don't know what imbalances are, it is basically three candles where the first candle and the third candle, high and low, do not touch each other. Usually, if price is efficient in the market, price will not leave these imbalances. So for example, let me see if I can find anything here. Example, there's an imbalance here, imbalance here. There's no imbalance here, for example, right? There's also no imbalance here. All these candles have been respecting and touching each other. There's also, I can't tell if there's imbalance there or not. No imbalances here because these candles, highs and lows, have touched each other. Same with here, no imbalance here as well. But you can see how the low of this candle and the high of the third candle do not touch each other. If they overlap like this, so if this high or this low went down like this and made equal pricing or touched it even past it, there's no imbalance here. But there is a massive gap here. These gaps are very clear drawn liquidity targets you guys should be using on the higher time frames. I don't use it as much on the lower time frames. Higher time frame, it's a lot easier to use for your drawn liquidity. For example, if you're trading here and you're looking for some sort of buy, where are you trying to buy towards? Well, you're buy towards the next PY. So for me, the PY is this 4 hour or in 1 hour here. So 4 hour, it would be this block right here. Okay, and I'd even cover the high 2 here as well. This is the 4 hour PY. Now, if you go to the 1 hour, this imbalance looks even better, right? Look how big and massive this gap is. So we didn't even hit the 4 hour supply before my trade. So I was still looking bullish because we were supposed to fill these gaps. These gaps are meant to be filled. Now, if you go to the 30 minute, you see we have a POC here, okay? That is the POC right there. So we do have a POC here. All right, so we have a POC, and then we have ultimately what I was looking at was this 1 hour origin here to get filled. Now, if you look to even the more to the left, you can see we did clear out a ton of liquidity. All these lows got taken out. This very, very major low got taken out here. So I am personally very bullish here at this point, meaning AKA this supply is likely to fail. But I don't need to predict that far because price currently, when I was looking for my setups, was down here. All I know is at least price, by the bare minimum, will go at least towards this 1 hour supply zone and fill this entire gap. I don't need to know if this high is going to get taken out just yet. Later on, yes, when price gets closer and closer to mitigating this, I can anticipate, yes, we can maybe take that out because of this key knowledge on the left. With this major low made this major high, right? This base structure. Everything else in between here is this internal swing structure. This is internal swing structure. If we're looking at the main major structure, is this. Now, if you go maybe on something like the 4 hour, it might look a bit more clear, right? You can see clearly this 4 hour, take a low, stop liquidity, and of course, we're going to get a massive, even though this is two sweeps back to back, we're going to get at least a big move on a lower time frame because keep in mind, a 4 hour low is going to cause a massive move on a lower time frame, even if it is not a valid liquidity sweep. If I could give you guys like an example, maybe I can see something like, let's see, this break structure. Some people are going to say this is a break structure, right? But you can see, even if it's a break structure, even if you're treating this as a liquidity sweep, even though it's not, you still see how big of a move did we get here? We made a 2 to 3% move. That's a massive, massive move on a lower time frame. I mean, let's see if I can even show you guys how big of a move this was on a lower time frame. This is why you got to understand, you don't want to zoom out too much or too far into the future. Look how big of a move if you just took longs down here is, even though this long here is counter trend on the 4 hour. So going back to where price was at the time here, basically we did mitigate a 4 hour demand. We had 4 hour demand here. We had a sell to buy here. And why did I mark that? You can also mark here as well, but I believe I missed a trade here. Initially, which at open, which does suck, but it is what it is. I don't recall exactly why, but I did not take that trade initially. Otherwise, that would have been the best possible setup of the day. Now, make sure, again, your PYs, your mark are in discount. We are in discount here, right? This is the high, this is the low. Why? Because this low broke this major high here. Go to the 1 hour, might look more clear. If you go to the 5 minute, it's gonna look like a bigger swing break, right? So this major break here. And now, some people may ask, why don't I mark out this entire low all the way down here? I would mark this if we mitigated something valid on left, but we did not. We didn't mitigate anything on left here. We're in this gap here. So there's no reason for us to get a mitigation cycle, right? A mitigation cycle would mean we mitigate something valid here on the left, and then we go back to 50% here and then go higher. However, no, we didn't mitigate a single thing. We're just inside a gap here. Knowing we're inside a gap here, I'm trailing my structure here. Okay, we're trading this internal structure, if that makes more sense. Internal swing structure. So yes, we are in discount. We hit a 4 hour demand. The best potential setup you could have taken is off this. There's either POC, even hit the OB to the tick here actually. So you even get rid of this POC, but hit it to a tick on OB right there. And this would have been the best setup of the day. This would be considered like an A setup because there's not really a major liquidity sweep. I mean, you can consider London session low here if you want, but this low didn't make a brand new high up here. So it's not something I'm really looking for, to be honest. I'm really looking for, okay, we can take out liquidity on the left here. We just mitigated 4 hour demand in discount. So this would be the ideal setup here, going for 6R. But just because you missed the initial setup, that does not mean that you're not going to make much risk reward, right? You still make good risk reward. Because look, I later took a stop under setup. We mitigated the supply. I'm not looking to short here. Why? We hit a 4 hour demand. We have a very massive gap, like I said, using these two things. Indicator, bullish. High timing gaps and imbalances, bullish. Both are pointing to the direction to the upside. So I waited here for my internal, let me turn off my indicator real quick. I waited for my stop under setup because we mitigated supply. And now we are waiting basically for internal sweep. Both of these lows will be sufficient. I entered a bit earlier on this first low here, knowing that price can take out both lows. I did cover this marked out right here, this sell to buy, just in case we do mitigate it a bit. Sometimes we will. Sometimes it's something related to how micros and minis, or even a divergence between ES and NQ, where one will barely touch it and the other won't. So you want to be more careful and be more cautious with your stop losses for stop hunter, especially when you have such a clear draw. I don't want to miss the move. And where's my target? Very, very easy. This high right here is my target because obviously we're going for the next high to fill this gap. So I could have even targeted, all the way up here if I wanted to, right? But I just knew that if we target up here, this is a very good target. We have so many highs here of liquidity that there's a chance we can get like a mitigation cycle potentially. And, I would basically be in what I call profit drawdown. So instead of being out at 6 risk reward, I price can come back, get me out, maybe break even potentially, and then go further. I don't want to have that to happen. I'm already up 6 risk reward. Just secure the bag, right? I don't take partials, so this is a full 6RR trade. Not like any other guru traders where they partial here for maybe 0.5 risk reward, 1 risk reward. No, this is a full 6RR trade I took. So that's the first setup here. Now, the second setup is basically taking a continuation after you take out this high because, like I said, there's such a gap here on the left. I'm trying to trade with the trend. Turn on the indicator here. The trend given to me on this day was bullish. So I'm trading with the trend and trading with my mechanical draw liquidity, which is the gap. Now, this is the low I was looking at because this low made this new high. This pullback is way too tiny. I would never use something this tiny of a pullback like this. Like, you see how this break is so insignificant? Some of you guys do use this and it works, For example, it worked here. this tiny little pullback, if you took a stop under, it played out perfectly here. You could have made very nice risk reward. But for me, I'm looking for something more major, more significant. Something like this is much better for a stop under, right? There's another stop under setup you could take. Carve it a low there, TP at the high. So there, that is that. This is basically another stop under, and this is a trade I called out actually on live stream. If you guys check my YouTube channel, go to the live section, you'll see that I called out this trade here on live, and originally my target on live, I believe, was at least the high here, or even the draw liquidity much higher. However, I noticed we did SMT here with ES. What does this mean? For those that are new, it stands for smart money technique or tool. I don't really remember. I don't really care, to be honest. Just know what the concept, understand what the concept means. Essentially, it means ES took out this high, NQ did not. Two correlated assets, one took out a higher low, the other one did not, aka you can expect price to reverse on the other asset. So this is why NQ reversed all the way down here, and I got out basically at, I believe, this candle break here. I trailed my stop loss below here. Usually my rule set does tell me if I get an SMT, I should just close immediately as soon as we got the SMT. So I could have, caught a little bit more risk reward here, maybe like 0.3, 0.4 more risk reward if I closed optimally. But I did trail just a little bit just to see, because we're so close. I was trying to see if we can get a little more push here, holding this internal low here. But no, we did not. This is not even a good internal low either anyway, because it did not even make a new high. So yeah, this is just a bearish candle essentially that was trailing below. And yeah, went against me. I exited here, got out at 3R, like I said, due to SMT, and I called it to the stream as well, telling people that if you want to exit for 3R, you can here, and that's where my trade was. Now, the stop loss placement here, I believe, you can check the stream later, but I believe I told everyone to move their stop loss either at this break or this break above, once we got very close to our target, just because it doesn't make sense, like I said, to price sweep twice, right? Price doesn't sweep twice like this. Okay, if it's trying to go bullish, it's going to go bearish at this point, and that's why you can see things are failing here, right? Now, it's going to go bearish, but only until we get to a valid PY. So, depending on which PY you use, if you did use the 5-minute here, unfortunately, it's a loss. It is what it is. If you wait for manipulation, you'll be fine. But if you switch time frames, you can find potentially a better PY that's going to be more clear. Again, if you're on a time frame where there's so many PYs, let's say, for example, you're on the 1 minute and there's like 10 different PYs. Switch to a higher time frame just to find a clearer PY to use. You don't want to go too high to high frame, but you want to switch until you see something that's a lot more clear that can help you filter down the number of PYs. Or you just wait for manipulation. Like I said, some people wait for manipulation to occur internally. This internal structure, you wait for the sweep first before taking any entry. Even if you hit a valid PY, you wait for this internal sweep first. That is another option you can utilize. But I just drew a trend line here just because it looks very nice here. I don't trade trend lines. I used to trade these trend line breaks. They do work. As you can see, in this case it worked. You would have entered here. Coming to low here. You could have got a nice 3 reward, but I believe at this point in time, I was off the charts and I was off stream after this trade. Took almost an hour to play out. So yeah, that's basically breaking down those two setups there. And last but not least, I'll go over this setup here real quick. This is ADA session. Okay. Same day, just ADA session. We have inducement here, taken out. We did have a PY here that got mitigated here, but this is before ADA session started. So you can see the wicking starts at 6 p.m. EST. ADA session starts. When ADA session starts, I'm looking for a PY to long off of. So I looked for this and I saw this PY here. And then I basically looked for my entry model to go to the upside, because at this point, like I said, I'm still bullish. If you guys see this line above, I believe that's the 1 hour. Yeah. So this line above is the 1 hour supply I was looking to target, right? Using the same draw liquidity, guys. Exact same draw liquidity in daily bias, being bullish. So I basically have my limit order set here, targeting the high here. Now, this is a situation where it's a little bit more complex, just because technically this is a limit order entry model, but this is also at the same time an OB entry model. Why? Because price here, when it was rejecting, it did not mitigate anything in premium. Mark out your premium discount. It was not even at the 50% level. And so what this means for me is anything I trade here is high probability to go to the upside. Even if it doesn't go for that high, it's high probability to at least mitigate a PY in premium, which is up here. So even if you target it here, that's completely valid. You don't have to target the high. But again, like I said, it was so clear to me this 1 hour was a draw. So I just targeted I believe this pre-stay high. Let me see. At that time it should have been pre-stay high. Yeah. So that was pre-stay high at the time. I just targeted that high. Again, you can target the 1 hour if you want to, but you know, I did miss out on 2 risk reward. It is what it is. It's cool. Cool with me. It's a good trade, good risk reward. I don't mind just TPing there. But again, a bad TPA or a bad trade would be trying to short here. There's no reason to short here, okay? Especially when we have this gap, like I said, on the left. So you can TP here if you're really not confident, but don't short there, right? Ideally, this is how you should be trading. 36 RR, limit order, and boom, hit TP. So that sums up today's trade recap, going over all the trades. Hope you guys did enjoy today's little video. I did go over a good amount of content information to show you guys. I will just replay this trade real quick to show you guys what it basically was in real time. Again, it did move quite fast because we did have the consolidation already here. So once we do break out of that, we should easily see a bigger push. If you guys want to learn more, click the links down below to my website, essentialtradersuniversity.com. You can check out my one-on-one mentorship or the 100 course, and I'll catch you guys in the next one. Peace.